What if I told you the single best stock to buy right now is hiding in plain sight? In a market buzzing with noise and uncertainty, there's one company that I believe offers a powerful mix of safety and explosive growth. As an eToro popular investor, I don't just talk about stocks, I put my own money on the line. I'm actively buying more Mastercard for my portfolio and for the investors who copy my trades. Stick with me because I'm about to show you the powerful advantages and hidden growth engines most people are missing, and why I'm convinced Mastercard is one of the best opportunities in the market today. For anyone new to the channel, welcome. My name's Robert. As an eToro popular investor, my job is to find world-class businesses that can anchor a portfolio for years to come. And right now, no company fits that bill better than Mastercard. I'm not just recommending it, I'm showing you the proof behind my conviction. There are 3 big reasons why I'm so bullish on this company. First, we'll look at Mastercard's nearly untouchable competitive advantage, what I call the digital toll road of the modern economy. Second, we'll uncover a secret growth engine that's growing way faster than its main business. And third, I'll show you its financial fortress of a balance sheet, which proves this company is an absolute money printing machine. By the end of this, you'll see exactly why I'm so confident in adding to my position right now. Let's start with the bedrock of this investment, Mastercard's incredible economic moat. The easiest way to think about this company is as a digital toll road for the global economy and global commerce. Every time someone taps their card, clicks buy now, or sends money across the world using the Mastercard network, the company collects a tiny, almost invisible fee. It's part of a classic duopoly with Visa, and together they've built a network so massive and deeply embedded in our financial system that it's practically impossible for a new player to compete. This isn't just about having a well-known brand, it's the network effect in action. The more people who have a Mastercard, the more stores that have to accept it. The more stores that accept it, the more essential that card becomes for shoppers. It's a loop that gets stronger every year, and unlike a bank, Mastercard doesn't take on any credit risk. They aren't lending you the money, so they don't have to worry about defaults when the economy gets shaky. They're just the secure pipeline that makes the transaction happen, taking a small piece of the trillions of dollars flowing around the world. The numbers don't lie. In its recent third quarter of 2025, Mastercard reported that gross dollar volume, the total money spent using its cards, grew by 9% in local currency. Its switched transactions, which is the number of times the network is used, grew 10%. The company powers economies in over 200 countries and territories, which shows its massive global reach. This isn't a business just hoping for growth. It is fundamentally wired into the expansion of the global economy itself. That is a powerful and durable advantage. Now, if the story stopped with the payment network, Mastercard would still be a fantastic company. But here's the part that really gets me excited, the part most investors seem to be sleeping on. The real growth story for Mastercard is in what it calls value-added services and solutions. This is a set of high-tech services that Mastercard sells to its clients, the banks, merchants, and governments on its network. We're not talking about simple add-ons. These are critical tools for cybersecurity, data analytics, fraud prevention, and digital identity. In a world with rising digital threats, every business needs this kind of protection and insight. And this part of the business is growing at a blistering pace. In the third quarter of 2025, revenue from these services shot up by a staggering 22% on a currency-neutral basis. That's more than double the 10% growth of its core payment network. Not only is this segment growing faster, but it's also extremely high margin and makes customers incredibly sticky. Once a bank builds its systems around Mastercard's fraud analytics, switching to a competitor becomes a huge, expensive headache. This segment now makes up about 37% of Mastercard's total revenue. proving it has evolved from a simple payment company into a diversified tech powerhouse. They're pushing into the future with things like agentic commerce, getting ready for AI to make purchases for us, and they've already set up around 130 crypto co-brand card programs, putting them at the center of digital assets. I believe the market is misjudging this company, valuing it like an old school financial firm when it's really a high growth tech platform. A great story is one thing, but the numbers have to back it up. When you open up Mastercard's financial statements, the word that comes to mind is fortress. This company is a powerhouse of profitability. Let's start with profit margins. Mastercard consistently pulls in a net profit margin in the 45% range. Just think about that. For every dollar in sales, nearly 45 cents drops straight to the bottom line as pure profit. That's a level of profitability that most companies, even in the tech world, can only dream of. It's proof of how scalable their business is. Once the network is built, every new transaction costs almost nothing to process. Next, let's look at its return on capital employed, or ROCE. Mastercard has an astonishing ROCE, which has recently been around 50 to 55%. A figure this high is almost unheard of and shows how incredibly efficient the company is at using shareholder capital to generate profits. On top of that, the company is constantly buying back its own stock. Over the years, Mastercard has spent billions to repurchase its own shares, which reduces the total number of shares outstanding and automatically increases earnings per share for investors. It's a tax-smart way to return cash to shareholders and a huge vote of confidence from management that they think their own stock is a great deal. Combine that with a growing dividend and you get a company that is laser focused on delivering shareholder value. So what's the catch? A smart investor always looks at the other side of the coin. The arguments against Mastercard usually come down to three things: competition, regulation, and valuation. First, competition. The elephant in the room is always Visa. And don't get me wrong, Visa is a phenomenal company, but Mastercard has been showing stronger growth in key areas like its value-added services. There's also the constant threat from fintechs, but Mastercard has been smart about it, partnering with many of these innovators instead of fighting them, making sure it stays at the heart of the financial world. Second, regulation. Being a global payments giant means you're always under a microscope. This is a real risk, but regulatory costs are just part of doing business in this industry, and Mastercard has a long track record of handling these challenges well. Finally, let's talk about the price tag, because this is where the opportunity really is. Some people will say that Mastercard's forward PE ratio, which is around 30 times, makes it look expensive compared to the rest of the market. But that's a short-sighted view. As of late 2025, Mastercard's PE ratio is trading below its 5-year historical average. You're getting a chance to buy this world-class company at a discount to its own recent history. A premium company deserves a premium valuation. Analyst price targets reflect this optimism, with the consensus sitting around $650 and some targets going as high as $735, pointing to significant upside from here. So when you put it all together, what do you have? A company with a nearly unbeatable competitive moat acting as a toll road for global commerce. A hidden high-growth tech business that the market isn't fully appreciating, and a financial fortress with incredible profits and a commitment to rewarding shareholders. Finding this combination of safety, growth, and a reasonable price is incredibly rare. It's why Mastercard is my top pick right now. I've put my money where my mouth is, And as an eToro Popular investor, I'm confident this will be a fantastic long-term investment for me and my copiers. Now I want to hear from you. What's your take on Mastercard? Do you agree with this analysis, or do you see risks that I might have glossed over? Drop your thoughts in the comments below. And if you enjoyed this breakdown and want more of my investment ideas, make sure to subscribe to the channel and hit that notification bell so that you don't miss the next one. Thanks for watching.